Hi everyone, welcome, and I want to talk about a very important concept in investing today, which is known as capabilities and how it is a pattern of success. So I want to start with an example of a pani puri wala. Imagine if we wanted to make money from selling pani puris, right? We are investors, we can't do that. So what we need to do is to find the pani puri walas, right? Who have the capability of selling pani puris. It is difficult to predict when the demand for pani puris might come. But for example, you can think that okay, people on Juhu beach selling pani puris will make money whenever the demand for pani puri comes, right? Imagine that COVID is going on. The pani puris walas that emerge strongest, who are still there after COVID, will make a lot of money, right? Whenever the demand comes back. So I think essentially I want to also highlight that this is basically the core of investing, right? It doesn't matter what is a bull market or a bear market. The core of investing, at least for me and like my philosophy, is to find the pani puri walas, right? Who are the guys who are the most capable, who can sell whenever the demand comes. So it's basically capability plus tailwind is equal to huge profits, right? So essentially, we really can't predict with a lot of certainty the demand curve or like how exactly the demand would pan out because of a lot of macro variables, things like government policy, but we can predict capabilities, right? So it doesn't matter whether it's a bull market or a bear market, we are always trying to find the companies who have the highest amount of capability, who are the pani puri walas, right? So let's come to a third concept. Essentially, why do I say that? So I think moat and growth are both very important concepts in investing, right? You want a company that can grow and you want a company that has a moat. Now I'm going to tell you the most important thing, at least to me, that was a aha moment or a eureka moment, which is that I think both stem from capabilities. Capability is the heart of both moat and growth. Right? Now, how is that the case? Why is capability the heart of moat and growth? Think of it this way. If there is a company that has a core capability in a particular industry, for example, imagine a company that can make shunts, right? It would be very difficult for anyone else to take that profit away from that company, right? It has a right to win in that market. It has protected profit pools because it has that capability of making that particular type of product, which is, for example, shunts, right? That explains the moat path. Now the growth path comes because of the fact that whenever anybody wants that product, they have to come to your company. There is just no other way. If today you consider, for example, innovators, synthesis and agrochemicals, SRF is totally indispensable to the innovators, right? And that basically shows the capabilities that SRF has, and that capability leads to both protected profit pools, that sustainable growth path, both of them. So important thing I want to say is capability is the heart of both moats and growth, and thus when we are looking for capability, we must look for a combination of moats and growth. So both have to be there, right? Let's go to the fourth point, which is of measurability. Now, how would you measure that a company has capabilities, right? There is the quantitative aspect of it and the qualitative aspect of it. On the quantitative side, you really want to look for companies which are growing faster than industry at a ROE or ROCE which is higher than industry over long periods of time, right? We're not looking at 1 year, but let's say at least 3 years, 5 years, 7 years. That is a proven track record of capability. Of course, we try to extrapolate the capabilities of companies into the future. You know, how capable can this company be in this particular product in the future? We try to do that extrapolation. That's how market cap and valuation happens. But in terms of how we get proof of capability, it is a combination of growth and moat, right? And now how do we measure it? Well, it's very simple actually. It's ROCE. The return on capital employed has to be higher than the industry, and growth, right? And when I say growth, I mean essentially market share gains, right? Essentially what that means is if the industry is growing at 4%, your company is growing at 15%, that's a proof of capabilities, right? If it didn't have capabilities, it couldn't have a higher than industry ROCE. If it didn't have capabilities, it couldn't have a higher than industry growth. So lastly, I want to talk about a few examples. Let's talk about a few examples. The first one I want to talk about is SRF, right? So SRF is one of the innovative companies in the Indian space because they are very far ahead of the curve when it comes to all kinds of fluorochemicals, agrochemicals, fluorine-based chemistry that they are working in. Now the interesting thing to sort of look at here is between FY 16 and 18 was a lean period where SRF revenues were not growing, right? But they continued the capex and they built out their balance sheet and their capabilities and their capacities so that when the growth came back, that is when they were able to grow. Now this is an important pattern of success in both successful investing as well as in recognizing capabilities, which is that people who are companies who are capable are going to do capex, they're going to continue capex during the down cycle or when there are headwinds, because that's how you will gain market share when the tailwinds come back, right? The point is, any company that is going through this pain period and is continuing to build out its business is showing you that it is confident in its capabilities. Now looking at the track record, we can then extrapolate and project whether that's a likely outcome or not a likely outcome, right? For SRF, we know that it did happen and they multiplied their revenue like 5x, 7x in the chemical segment after that 2018 period when the growth did come back. The second company I want to talk about is Shivalik. Shivalik bimetals. Now the interesting thing about Shivalik is that they built out this new product called shunts, right? That product didn't exist. With Shivalik, they were earlier into cathode ray tube monitors and then into bimetals, but they understood their core capability of metal joining and then did a lot of R&D to build out these shunts, which are basically a type of resistor to measure current, right? How much current is going through a circuit. Now the interesting thing is they built out this core capability, then did a lot of validation and a lot of customization with a lot of OEMs, right? Any kind of BMS companies, any kind of auto companies. So tier 1, auto ancillary and OEM, they did a lot of validations over a period of 3 to 5 years, right? That's how we figure out that the capability is getting built. Now once, and all of this obviously we figured out thanks to VP where people were going to AGMs and asking the right questions. Now the interesting thing to note is after doing all of this, they did a huge 3x capacity expansion, right? This is companies saying that, look, I have capability. Now the tailwinds are going to come, EV demand is going to grow and I'm going to be ready. So today Shivalik sitting at 35% capacity utilization still has something like 20-22% operating margin, right? And more than that. And the reason it has a high operating margin despite being at a low capacity utilization is precisely because of this fact that they have built out the capability for the future. The third company I want to talk about is racl Geartech. Now, a lot of these companies I've talked about in the past, but I'm trying to now use them as examples to bring out patterns of success. That this is a pattern of success. If you see it common across many companies, it's good to learn it and then look for that pattern in other companies, right? So if you look at racl, for example, 2018 to 2020 was not a good period for the global auto industry. It was degrowing. If you look at the volumes, they're going down. And despite that, you can see that racl was actually growing their top line at 15 to 20%, even in the down cycle, right? That itself should excite you. Now, the other interesting thing is, even during COVID, when most auto ancillaries were closing down, thinking about survival, that is when racl increased their capacity expansions and their capex, doing 50 crore to 100 crore capex over that period of time, 2020, 2021. So all that investment in capacity, all that investment in orders for ZF, which is one of their big clients now, that is the reason that they're able to perform well today. That is the reason that the business is doing well today, right? And this also shows up in the cross-cycle ROE. If you look at their ROE, it is above 20%, which is very rare for an auto ancillary. People should compare across the auto ancillary industry to verify that. The fourth one I want to talk about is Angel One. Right now, think about what is happening with Angel One. They already started their digital transformation journey before COVID happened. They were already ready with their app, right? There were not too many traditional brokers who had successfully done that transformation. They primarily started after the demand came. Now, this is why the Pani Puri example is important, right? You have that. You are the Pani Puri wala, you have that app, you are ready to capture. That is why if you look at their profits and their revenues, the revenues might have grown 3 to 4x during the COVID period, pre-COVID to now. The revenue would have grown 10x in that period, right? So this is the core capability thing that I was talking about. This is the kind of management and company we want to track, right? Whether to invest or not is a very personal decision, and for me personally, it also depends on headwinds and tailwinds and the valuation and the relative opportunities available. But it's definitely worth tracking, and for me, capability is the universe, right? Any company that shows that capability, which is at the heart of ROCE, growth, and competitive advantages, those are the companies I want to track, right? So Angel then was able to grow because it had that, the Pani Puri wala was there when the people and the demand for Pani Puri came. And even today, you can see that in a down market, they're still gaining market share, right? All of that is proof of capability. The next company I want to talk about is PDS. So PDS is actually a platform for sourcing of retail apparels mostly. So if you think about, imagine if Walmart or any of the other retailers in the West want to source garments, right? How do they get the garments that they sell? But the thing to think about is, with something like apparels, it's a very, very large number of SKUs, thousands, tens of thousands of SKUs, right? All of that sourcing is a pain, because for companies like Walmart to visit Egypt, Bangladesh, India, Vietnam, and all of these third world countries that have operations here, have monitoring here, is a lot of operational headache that they have, right? Which is why companies like PDS exist. They're like a platform. So if you think about PDS, think of it like a platform which matches the buyers on this side with sellers on this side. Now the reason I am drawing the sellers with a much larger sort of scale is that actually the manufacturing side is a lot more unorganized, right? And so basically there's a lot of buyer demand aggregation and a lot of supplier supply aggregation. So this is something that Palak talks about in the con calls, that for example, if there's a standalone factory in Egypt, how would they get the revenue and the business from Walmart, right? It's almost next to impossible. But because they are on the PDS platform, so PDS is able to do that supply and demand aggregation and then figure out what's the best way to do it. Now a lot of people might think, okay, but why would you want to do this? It's interesting to note that even Amazon does this kind of human level sourcing. Now the reason you have to do this is to ensure that the quality is very high, right? Now of course anybody can sell on Amazon, that's not the point. The point is, for the large SKUs, for the high volume products, Amazon would want to do manual sourcing, right? It would want to figure out who are the best quality buyers and who can be those standout brands, those standout manufacturers that I want to sell and sort of give my platform to, right? So a lot of sourcing even in Amazon today is manual. The last company I want to talk about is xpro. So a lot of these companies I've already talked about, right? xpro also I've made a thread, but think of it from a capability point of view. The fact that when most companies in India were thinking of volume of biax film sales, right? How much are we selling? Is it 10,000 ton? Is it 1 lakh ton? 10 lakh ton and things like that? xpro was thinking about capabilities. xpro was thinking about value addition. xpro was thinking how can we go up the value curve, right? There's a value curve here where like this is like the most commoditized BOPP films. These are like maybe a bit more specialized, something which SRF makes. Then there's this, right? Where the game is not volume anymore. It's not volume, it's value. It's about how high can you sell it, how much value addition have you done, how difficult it is for others to do that same thing, and thus you get a pricing premium there, right? So this is the game which xpro played. They used their line which were present for making packaging films, and they were able to make some kind of modifications and sell capacitor films from those lines. So a lot of good work has been done by xpro, and I think this is why the capabilities exist, right? And now we see the proof of that in the capacity expansion as well, right? Where they're saying that we have been able to compete with the Chinese imports despite there being no protectionism that the government of India has done. There's no kind of duties imposed on import of capacitor films, and even despite that, xpro has been able to grow, compete, and now they are doing a 3x capacity expansion so that they can gain even more market share by doing substitution for the import, right? And once that is done, I'm sure they will also want to grow their exports as well out of India. So yeah, that's what I wanted to talk about, capabilities and finding those companies which lie at the intersection of higher than industry growth and higher than industry profitability and unique capabilities that power both of those.